Suresh Kalpathi is joining us now, the management of the company. Suresh, where do we start from? You just closed in J.K. Shah acquisition successfully, and then of course joining hands with Sridhar College of Comparative Exams. Let's start with the most interesting part, your commentary after previous results. You said that 24, rest of the 24 actually will be transformational in getting your profitability and enhanced growth back. What did you mean by that? There are in this quarter results, and of course, two more are left. How much improvement in profitability do you see there?
So FY23 was the first year we had multiple corporate events. We did our first set of acquisitions. The company listed, traded for the first full year during FY23. FY23 also saw our revenues go from 75 crores in FY22 to about 200 crores in FY23. The targets we have set for ourselves for FY24, couple of reasons, I believe it will be transformational. The first is we expect our revenue to continue to double this year too. So we expect to head north of 400 crores for FY24. The second one is that we expect to deliver a very significantly EBITDA positive for FY24. The internal targets for the company is to see if we can reach as high as between 90 to 100 crores of EBITDA for FY24. And this will also be the first year when Veranda Learning will deliver its full year positive EBITDA for the entire business. For me, it's also transformational for another key reason. Well, Veranda has built itself through acquisitions and clearly stated that our goal is to build this business through multiple acquisitions. The value in any of these acquisitions come by not just moving Veranda's name into their cap table, but also demonstrate how well you can integrate these acquisitions and help them really accelerate and grow. From our perspective, we are doing multiple tuck-in acquisitions. So if we, for instance, the one that you mentioned, J.K. Shah Classes itself has been a classic and iconic brand in the country. When we acquired them, their EBITDA was about 20 odd crores. With multiple tuck-in acquisitions, the organic growth that we are accelerating within that brand, we will at least expect to see J.K. Shah's EBITDA double this year and continue that momentum at least for a few more years until we make them the largest national brand in that space. We are also helping them expand their portfolio of content. So apart from just being the best test prep for CA, we are extending it into company secretary, ACCAs, CFAs, CMAs, CPA, into regular commerce training for people who are going through BCom and MCom. So we are really expanding them out as far as the subject matter is concerned. And the third thing that we do with most of these assets is also help them the largest hybrid player. So we bring a lot of our technology to bear to ensure that J.K. Shah Classes also becomes the best and the biggest brand in the online space too. So I think it's an iconic year because we are demonstrating that it's not just about acquiring various businesses to put all of this into a motley ensemble, but really to ensure that when we buy, we also create the right incentive in the environment within the Veranda ecosystem that companies that we acquire feel very, very comfortable about it, and to ensure that we are able to enable and accelerate their growth. And that's really what adds value to a Veranda Learning shareholder.
Sure, point taken. So a lot of transformation underway, Suresh, as far as the business is concerned, even your recent acquisitions, etc. Now, given that FY24 is going to be a transformational year and you're building on the base and foundation of that, how would FY25-26 pan out? And with respect to all of these acquisitions that you have done, what's the way that you're looking at funding all of these? Because it'll need a lot more investment as well with the kind of edtech that you're planning.
So far, we have had a good success with our existing investors where we've been able to tap equity when required. And I think we have had a great support from lenders who have seen the value in the type of acquisitions that we are doing. The last acquisition that we are completing is being funded by Piramal. The previous one, we got it from through a line from Hinduja Finance. And most of these are at rates between 10 and 13%. So it's at very competitive rates that the acquisition financing that we've been able to get. We have also tapped at right points in time in terms of equity to keep the leverage also fairly low, that it does not destabilize the way we are building. As far as FY25 and 26 is concerned, we expect to be able to maintain our momentum in terms of doubling our top line. And this time around, we also want to ensure that the bottom line keeps on track with it. So we clearly want to build this through stitching together the fabric through multiple acquisitions, but post that acquisition, help the companies that we are acquiring to build them out stronger, better, and faster by giving them the right environment. And most of what we do beyond just financial structuring of some of these is also creating an ecosystem that's extremely synergistic. FY24, I think, will also be a year where the number of students who will go through the Veranda ecosystem is expected to cross 1 million students.
Wow. So, just coming back on that point, if you're aiming at 100 crore EBITDA for ending this year, and then you're looking at doubling your top line the next, how much in proportion of that would your EBITDA go up for 25?
We expect the EBITDA to at least keep track with it and double. Again, as I said, Veranda is being built on a fabric of acquisitions. While we are completing and delivering value on the acquisitions made last year, there are acquisitions that we are just completing as we speak. Those are acquisitions, again, where they will contribute to a significant part of our growth going into the second half of this year and into FY25. As I had mentioned, the company continues to be in conversations with various assets to complete filling in the grid and the fabric. And we will continue to build. The key underlying will be that we will maintain profitability. We will maintain the pedigree of the assets that we are buying. And I think given the small base that we are growing out of, we see this continuing to double both at the bottom line and top line, at least for the next 3 to 4 years.
Suresh, before I let you go, just a quick word. You may choose to react on it or not, but we all know that one of the very large players, in fact, the largest, seem to be getting or hitting a wall where, questions are being raised on the financials, the debt issues. Are they vacating a space in the marketplace is what I want to know from you. And are you looking at that space which is being vacated?
In some sense, yes. As far as our foray into K-12 is concerned, possibly yes. I think a whole lot of money was spent to create awareness and create depth in that market. And I don't think it is just ourselves. I think there are a few other players who will benefit. And my guess is, given the restructuring that's going on in the entire edtech space, the players who have kept their eyeball on profitability and meaningful and healthy growth, and whoever is left standing, I think they will find a significant benefit. Apart from just that itself, with the overall increase in the spends that's happening at all levels, state and central, in terms of skill development, the changes that's being brought by the new education policy, and again, some of the acquisitions that we just completed, aligns it perfectly well to take advantage of the NEP that's just been rolled out. All of that is creating a whole lot of additional opportunities, and in an economy that probably is the world's fastest growing at this stage. I don't want to comment specifically on any company, but it's a growing market. There are a few slots that are getting vacated almost all the time because of the significant restructuring going on in the sector.
Suresh, on that note, we let you go. Thank you so much for joining us. So quite a bit of positive commentary coming in. The foundation is laid for a transformation, expecting it to double it in FY25, and the roadmap seems to be quite well laid out.